Cool. Awesome. Super excited
Yeah, let's do
to
it.
have you here, Haseeb. Thank you so much. I've read many of your
Thanks for having
writings.
me.
Yeah, thank you. I've read many of your writings, even back to like some of the ones that you've written on Bology's blog, some of your OG writings.
Very
So
OG.
yes, so super excited to have you here and kind of just get your general thoughts on crypto and kind of state of the market. I think holistically, lots of things have kind of happened since like 2017. I know ultimately Dragonfly started in 2019, correct?
2018.
2018. So that bear market happened, which was brutal. But then ultimately, kind of
Hmm.
what emerged from that was usable applications, and now kind of transitioning into things that people can actually use. So I kind of wanted to just kind of get your general thoughts on the overview of like this 2021 market cycle. How do you think it went, like, and any things that kind of like caught you off or surprised you, and then after that get into kind of some more of your writings.
Yeah. Okay. So the 2020 cycle, clearly the thing that kicked it off was COVID and the COVID stimulus. Of course, when COVID first started, that's when we got Black Thursday, when MakerDAO ended up imploding, and of course, all crypto dropped 50% in a single day. And I remember it feeling like the potentially the end, right? It felt
Yeah.
like, oh my God, like Bitcoin was just, BitMEX had totally shut down. There were no circuit breakers on any of the exchanges at that time. And so it seemed like Bitcoin was just going to liquidate all the way down to zero. And for a lot of people in the industry, we just saw our life flashing before our eyes. We thought, like, is this over? Is this
Yeah.
like actually the end? Um, and of course, it turned out not to be. And the COVID stimulus that ensued after lockdowns began ended up becoming a massive buoy to all financial assets. And crypto was no exception to that. If anything, it was one of the biggest beneficiaries. But it wasn't just that. It wasn't just that, okay, there's a lot of money in the system and therefore the price of everything goes up. There were also a bunch of secular forces that were pushing crypto forward. So one of those, of course, was the fact that in the post-COVID era, everybody was stuck at home, and all of a sudden, crypto, which is like this thing that you do while you're at home, like just playing around, tinkering with your computer, playing around on the internet. This was all anybody had.
Yeah.
So it's like, look, either you can play video games, you can browse social media, or you can try to build this financial future thing.
Yep.
And for a lot of people, this gave them the room and the appetite to delve in and start consuming these products and also start playing around and contributing to Web3. And so that was the first big moment that a lot of people really had the space to learn about Web3. So the other side of that, of course, was that Paul Tudor Jones, I think it was in 2020, he was the first kind of mainstream hedge fund manager to endorse Bitcoin. And the
Yep.
way he described it was that Bitcoin was going to be this monetary inflation hedge. And so a lot of institutional investors suddenly got on board with the Bitcoin story, seeing that, hey, the story behind this, fixed supply, unmanipulable currency is very attractive in a world where suddenly the M1 money supply has spiked to all-time highs, right? More increase in the M1 than we've ever seen in the last 50 years. That, to me, that's like the 1-2 punch that ended up really changing everything. We saw with that the advent of DeFi. DeFi exploded in the summer with the launch of Compound and Comp Token. Then we saw the rise of NFTs. First, basically the winter of 2021. First starting with Nifty Gateway, then transitioning to OpenSea and some of the more open stuff. Then we saw crypto gaming take off in 2021 with Axie Infinity, and this things just kind of kept happening and kept building on each other and getting more and more crazy. So it was then, when did the cycle come to a close? I would argue that, the moment that the cycle came to an end was the collapse of Terra.
Yeah.
And that was, I believe that was May of this year. And Terra, this algorithmic stablecoin, I'm sure at this point everyone in your audience knows
Yeah.
about
Yeah.
Terra, so I probably don't need to explain. But Terra was, I think, the last chink in the armor of the unbridled optimism that was coming to an end. So obviously, since November, macro has gotten increasingly adverse to crypto, and all risk assets started selling down starting in November, which is when we saw the first inflation print last year. Um, Crypto was no exception to that. It was really trading all of a sudden in lockstep with the Nasdaq. But it was Terra, I think, that internally within crypto showed people that, hey, the party's over.
Yeah.
All the stuff that we thought was insuperable, and like we just, if you believe, if you, 3 comma 3, if you just,
Yeah.
if everyone just like holds on hard enough, that we can make it come true. Terra was like the first very demonstrable thing that proved to us, nope, if it doesn't work, it doesn't work, and it's going to blow up in all your faces.
Yeah, it took me a couple days to even like process all that after the Terra collapse. It was monumental. It was crazy. So I think that was an excellent summary. Maybe to kind of take it one step back real quick. I think one of the interesting things that really kind of caught my attention again was kind of coming out, or when I thought like the bull run was like starting, or what kicked it off was like Compound and like what they did with the liquidity incentives. And I just thought once kind of all the food tokens took off, I was like, all right, this is happening. It's going to be like a 2017 style moment again. And really what I thought was so fascinating was kind of like the composability of it all. But kind of as that continued to move forward, the user, that was really like only kind of brought about by a couple tens of thousands of people, I think less than 100,000. But now, like when you're looking at like Dune Analytics, really kind of even still today, like the most popular dApps are only getting like only have a couple million users, definitely less than 10. But even like the more popular DeFi protocols ever have only had a couple hundred thousand lifetime users. So I'm curious, like from like all of these like cool applications being built, it kind of still feels to me like in some sense we're still in like the infrastructure layers, which I think may be like a good segue to how you kind of think of like your excellent piece on like blockchain globalization, cities and countries. Could you touch upon like that thesis and then kind of overall like user adoption in Web3?
Well, so okay, let me actually take that in reverse order. Let me
Okay,
start with talking about user adoption, and then I'll
perfect.
kind of transition into the blockchain globalization thesis. So with you pointed out that in absolute number of users, on-chain protocols, on-chain applications have pretty low penetration by any kind of standard Web2 metric.
Yes.
This is absolutely true. If you look at the concentric circles of crypto, right? There's something like, I don't know, 300 million people in the world who own crypto.
Mm-hmm.
The vast majority, vast majority of those people have never touched anything on chain.
Yeah.
Almost all of those people are sitting in Binance, or they're sitting in FTX, or they're sitting in Coinbase. And they don't even really know what it means to touch the blockchain, right? They just think that, okay, I own Bitcoin. What else is there?
Yep.
For now, there's a narrower circle of, call it maybe, on the order of, let's say, 10 million people who have actually interacted with on-chain applications. And that means Uniswap, that means Axie Infinity, that means, buying NFTs on OpenSea, this constellation of things. And then, even tighter than that, there's the portion of people who've done complicated things. And that's probably, less than 1 million people who've done complicated things, right? Like, so a long tail DeFi protocol,
Yeah.
definitely less than 1 million people who've touched that stuff. And then, the people who are doing, people who like know how to read Solidity, right? Like
Yeah.
the people who like actually can underwrite the things that they're interacting with and are doing, flash loans or whatever, less than 100,000, maybe less than 50,000, right?
For sure.
So it's important to keep in your mind those concentric circles. So like what it means when we say that crypto went mainstream. Crypto went mainstream. It absolutely did, right? In terms of the total number of crypto users, it's still a massive, massive number. And it's also true when you look at, when we looked at the President's Working Group report just a few weeks ago, their estimate was that 16% of American adults own crypto. Like that's relative to 2017, that was an absolutely crazy number,
Yeah.
way higher than what we saw in last cycle. But to most of these people, they don't know even what you're talking about when you say, "Oh, but what about what gas fees, right?" Like, they're like, "What are you talking about? What is that?"
Yeah.
So okay, that's one side of it, is that it's important to understand what we mean when we say that there aren't a lot of users. But the second thing I want to say is that when you look on chain, you look on DeFi. I mean, I think if you look at gaming, it's a different story. But if you look at DeFi in particular, saying that, okay, well, DeFi only has, let's say a few 100,000 users, right? Let's say 500,000 on the high end.
Mm-hmm.
If DeFi has 500,000 users on the high end, the question is not how many users are there in absolute terms. The question is how valuable are those users? And here's what I mean by that.
Okay.
Let's say that I'm a bank, okay, and I tell you that I have 100 customers, all right. That is not actually enough information for you to know if I am a community bank in Wichita or if I am one of the largest investment banks in the world. Because banking is a scale business, right?
Yeah.
If you're banking extremely large clients, then you could be an extremely valuable bank. If you're banking kind of small podunk people, you could have hundreds of thousands of users or clients and still be a fairly small bank. So the thing about crypto is that we think about crypto, and we often describe crypto in Web 2 terms, which usually means like comparing them to social media companies, which are the dominant companies in Web 2. And social media companies are kind of like the low end of monetization, meaning that you have billions of users, and each of those users monetize for a tiny amount of money, right?
Yeah.
So like if you're a Facebook user, if you're in the first world, maybe you monetize for like $10, and like that's your ARPU. And if you're from the third world, maybe it's like less than $1. That's not how crypto works. The way crypto works is that if you can get 100,000 people, but those 100,000 people are some of the richest people in the world, and they're using your products, well, your products, they scale massively in terms of the amount of fees that you can extract from very wealthy people. And so the point that I'm making here is that your mental model of how DeFi or how crypto monetizes their users, if those users are selected to be very wealthy and to have the majority of the wealth, then it may well be that, look, even if crypto adds another 30 million people on chain, but those 30 million people on chain are much less wealthy than the first million people on chain, that actually you might in total less than double the overall value of DeFi.
Yeah, that makes sense. I do like the analogy. I think personally, I mean, I got super interested. I used to do product, and kind of my background, like I was super interested in Ethereum and kind of all the things that Ethereum unlocked, and it was more in the past like an ETH maxi, but now reformed. Ultimately, I think I really just wanted people to use blockchains. And I think from the product perspective, like the valuation and the kind of, as you mentioned, I think is like a super interesting thing to think about. But I've just been personally kind of saddened by how few people actually do things on chain versus like
Yep.
the amount of holders, which holders is like the great first step. But I really want like ultimately it to be so easy and so cheap and so fast that like hundreds of millions of people are using these blockchains. And I think that's why I've been a little bit frustrated, like holistically, about like Web3
Yeah.
still today. But you make a good point on
So
like the
no, but look,
valuations
I
and the,
totally get that. Yeah, I think for valuations, like the
yep,
point I'm making is really about valuations, and I
yep,
think it's more true for DeFi. It's less true for gaming, right? Gaming doesn't work that way. Gaming is very lots and lots of users, and you monetize each of them a little bit. And so I think there was just a report recently that like Decentraland has less than 100
yeah,
daily actives or something
yeah,
like that, which is like for a $1.4 billion
yeah,
token, it seems a little optimistic.
yes,
Um, but okay, let's put that point aside. Okay, so okay, maybe this is the reason why it's not the end of the world about whether or not crypto has product market fit among the people it's going after. I think when it comes to you make a great point. It's like, look, I want to have a million people using this stuff, or not a million, 10 million, 100 million. I do too. The reality is that there is no blockchain today that can support 100 million people, not even close. Probably there's no blockchain today that can support 10 million people. So we've got a couple order of magnitudes to go before we can get to the level of scalability that we need in order for that to happen. And that actually brings me to the
yes,
analogy that I give
yep.
about scaling and about cities.
Let's
So
talk
let me
about it.
let me let me do the setup. Let me do the setup. So de facto, especially when this bull market first started in 2020, right? There was basically only one game in town, and that was Ethereum.
Yep.
And Ethereum, even in 2020, people were complaining about Ethereum as they still do today. Ethereum is slow. It was built a long time ago. It moves it improves very slowly. It's crazy expensive. Nothing ever seems to change. But Ethereum is the most happening place in crypto, right? If you want to know where the biggest DAOs are, they're all on Ethereum. If you want to know where the biggest DeFi protocols, they're all on Ethereum. Where the coolest cats are, they're all on Ethereum, right? All the biggest news, the biggest hacks, it all happens on Ethereum. And so it's kind of like New York. New York is a super expensive place. It's like, if you're priced out today, it's like super old, like it's hard to change the infrastructure, but it's the most happening place, right? It's the most happening city. You want to know where the biggest celebrities, where the biggest banks, where the biggest companies, most of them are headquartered in New York. But if you're an up and comer and you're like, hey, look, New York's full. It's fucking, it's so expensive. I want to find somewhere new where I can start my career, right? there's a good chance that you'll say, look, New York's not the place for me. So how do you scale New York? How do you move past just New York? So one answer could be like, well, you hope that New York builds their way into something better, which is kind of what we're doing with ETH 2.0. Anybody who's sitting around waiting for ETH 2.0, which, we got the merge, but we still have zero done on the scalability front.
Yep.
It's going to be years until ETH 2.0 actually has scalability improvements.
Mm-hmm.
And so that's not really a serious option, right? So, okay, we can't depend on New York to like scale New York. We got to do something else. So option number one is rollups. So rollups are, there are these blockchains that kind of extend out from the layer one vertically and allow you to like have a mini blockchain built on top of the main blockchain. I sort of analogize those to skyscrapers, right? Skyscrapers, they sort of come out of the city. It's like this technology you can invest in that builds vertically. It gives you the features of being in the city, right? But you also have your own kind of separate provenance and your own kind of weird rules because you're inside this building. It is a way to scale a city. And of course, New York has scaled by building up. But there are limitations and there are constraints about building up. Like one, you can only build up so far until you have to go build a second skyscraper.
Yeah.
And if you build a second skyscraper, if I'm in one skyscraper, you're in a different one, and I want to come hang out with you, it's like, well, I got to go all the way down my skyscraper, go down to the street, deal with all the shitty New York traffic, hail a cab, pay the toll fares, whatever, find my way to your building, and then go up to your building. And that sucks. Like, we don't fundamentally escape the constraints of living in New York City just because we live in skyscrapers, unless we live in the same one, and that's the problem with rollups, is that rollups, they give you a constant factor of scaling for each rollup. And then, if there are multiple rollups and you want to interact with somebody who's on a different rollup, then you got to deal with all the issues of being on Ethereum. You don't fundamentally escape the constraints.
Why is it constant?
It's constant because there's, if you think about it, most of these rollups are running Geth, right? They're running the same virtual machine that Ethereum is running. And so there's a limitation on how fast Geth can run.
I see.
Right. So let's say that at max throughput, let's assume that Binance Smart Chain is like max throughput for Geth. They're just running Geth at the fastest it can run, where like pieces are flying off the side. It's just like, putting in a hyperdrive and putting turbos on. Okay. That gives you maybe like, a few hundred transactions per second. That's what you get when you go like all the way to 11, like the fastest possible way to run Geth. So if you're doing that, because all this is serialized, right? Every transaction happens one after another on the same box, on the same state. So what's the fastest that can go? If you're running it at max speed, about 200 TPS. But so every rollup can do about 200 TPS.
The rollup doesn't have to be Geth, does it? For ETH?
It doesn't have to. No, it doesn't have to. So now if you want it to be EVM compatible, right? If you want to be able to launch Uniswap, if you want to be able to, deploy an NFT and create this and do that, like if you want to make it like Ethereum, then you basically have to run Geth or a Geth equivalent. If you want the rollup to just be a place to pay people, well, that's much easier, right? We have very simplified architectures for just, payment rollups, basically.
This might be a quick side tangent, but what are your thoughts on like the Ethereum virtual machine, because it is single threaded? I think it's been interesting for me just talking with a lot of these people and doing research myself, is studying the different virtual machines and also kind of studying the different consensus algorithms and how those kind of have developed and progressed over time. And now it's kind of, Solana was obviously the first to move to like a parallel processing virtual machine, but now I think one of your portfolio companies now, Aptos and Sui, and then others have, I think, the capability as well, but those three are like the primary ones focused in my mind. What is your kind of thoughts on the Ethereum virtual machine and then ultimately these different blockchains moving to parallelization as like the core focus for the virtual machine?
I think it's a big step forward to move to parallelization. I think Solana, very clearly, they were kind of the first major blockchain to do this. They were not the only ones. There were others that are also doing parallelization, but Solana is the only one that really kind of proved it out with scale, that they could do this effectively. The problem is that most blockchain loads are actually not very parallel. And what I mean by that is, like, anytime that you see Solana going down, there's a good chance that what happened was that there was one contract that everyone was trying to hit, right? And this is the nature of load, is that usually when load spikes, it doesn't spike in a uniform way. It's not that a bunch of people are trying to do a bunch of different things. It's that everyone wants to do one thing. And when everyone wants to do one thing, by the nature of that state being in one state at a time, you cannot parallelize. Yeah. So you have to basically devolve down to serial execution. And this is an ultimate constraint. Now, there's a lot of fancy stuff you can do at the margin when you have different contracts that are being hit at different times. But the degenerate case almost always is that things end up pinning one Uniswap pool or one NFT drop or one, the X, Y, or Z. Uh, and so that's part of the reason why, although like I'm very excited about parallelism, and I think Aptos and Sui are doing a great job in adding more parallelism into the base layer while minimizing the trade-offs you're making in order to do that. Um, at the end of the day, there's only so much that's going to get you because of the fact that these things are very there's a lot of contention for state in almost every real world blockchain workload.
Definitely. What do you think? I mean, I think it's been interesting watching Solana innovate as well and kind of continuing to iterate with like the fees per contract. I'm
Mm-hmm.
super fascinated by this because I've talked with other kind of L1 founders and they've said that they're very interested in kind of this aspect as well, being able to isolate specific hotspots in Anatoly's words to serialize just that transaction and the fees just increase for that. I mean, they still have to be serialized as you said, but at least those hotspots are isolated and no longer affect other parts of the chains. I'm curious to get your thoughts on like that kind of progression of parallelism.
Yeah, I mean, I understand the point that is being made there, which is that okay, at least people who are trying to use some other application, they're not being affected by the hotspot kind of overflowing. In reality, like what you care about is the aggregate of all your users,
Mm-hmm.
right? And the aggregate of all your users want to use that one piece of state. So for the aggregate of all your users, most of them are unhappy. Now, the minority person who's playing around with like, some little dinky thing over here that nobody else wants to play around with, yes, that person's happy. But, most of the people who actually want to interact with the blockchain are having a terrible time that day. So the like look, for a long time, and I gave Solana a lot of shit about this. For a long time, Solana did not have dynamic fees,
Mm-hmm.
right? And they eventually settled on this like per contract dynamic
Yep.
fee system. The reality is that in every blockchain there are shared resources. There are resources that every single transaction is going to end up hitting, um, even if the state is distinct, right? And for that reason, to my mind, like although I understand the reason why you would do per account fees, dynamic fees, I think at the end of the day, it is probably the wrong way to meter blockchains. I do think the right way to meter blockchains is global fees, or at least for if there's some segregated. If you're sharded, then okay, fine. Each shard can have its own set of fees, but there's always some global state that's being hit with every transaction, which is part of the reason why in Solana, there's only I believe it's four. They have like four separated like modules
Cores.
of compute units.
Yep.
Yeah, basically four cores that are operating. They don't have 16 cores. They don't have 32 cores because although they have graphics cards that can support that many cores easily, and of course CPUs that can support that many cores easily. The reality is that at a certain point, there's this rule called Amdahl's law that
Okay.
basically says that the more that you parallelize, the lower the efficacy of the parallelism because the performance of your system falls back to the least parallel part of your system,
Correct.
right? Which
Yeah.
is which is a very intuitive way of just saying, look, if you have one choke point, that choke point becomes everything, and the
Definitely.
more you try to scale, the less efficacy it's going to have because you've got the one choke point.
Yeah, I'm interested to see how they continue to add additional cores over time, and even like Aptos and Sui,
Hmm.
and see how they continue the parallelization. But it kind of making the bullish case, in my opinion, for like sharding and Cosmos or like Avalanche. Continuing on in like your analogies of cities and countries, how do you kind of see that continuing to play out with like these other blockchains? Are they just different cities, or maybe like even more holistically, like what do you
Hmm.
think the biggest bottleneck is to actually scaling these blockchains to onboard like the tens of millions and hundreds of millions of users that we ultimately want to get to?
Right. So the next step in that progression of the analogy I was giving you, it would be, okay, how do you scale in New York? You build a new city. And so this is what Avalanche is doing. It's what Solana is doing. It's what Polygon is doing. It's what Near is doing. And of course, what Aptos and Sui are doing. And to my mind, okay, so when you're thinking about building a new city, why do you do that? And what's
Mm-hmm.
different about building a new city versus the old one? Part of the answer is that, okay, well, there's just more surface area, right? So like if the size of the old city was X, now you can build something that's 2X or 3X because you've got two or three cities. The other answer, of course, is that cities tend to be quite different from each other. So if you look at the two biggest cities in the US, we've got New York and then we've got LA. And they are very different cities. And it's probably no surprise. It's probably like for some deep reason that these two cities that are the biggest in the US are very different. They're literally on absolute opposite sides of the country. And culturally, they're about as far from each other as you can get,
Yeah.
right? New York is like super aggressive, it's super finance focused, it's got like all the status and stuff. And then LA, it's super laid back, it's super sunny, like, people are super chill. They're just like, oh, I just want to be on TV, get my 10 minutes of fame. Um, that that dichotomy, what it does also is it allows people to self-select into saying, like, look, I want to live in a big city, I want to provide a bunch of value, but I want something very different than what those other people want, right? And that allows you, like, generally what happens very naturally is that cities become very different from each other in order to distinguish different trade-offs in the space of all possible cities. And that allows people to self-select into the city they really want to be a part of. And you see that too with L1s, right? Ethereum is very different from Solana. It's very different. And not just in terms of, okay, the way the EVM works and parallelism and all this other stuff. It's also just culturally different,
Yeah.
right? Almost everything about it kind of stands in opposition to each other, right? And that's part of the reason why Ethereum and Solana people fight so much on Twitter, is that it's in some sense inevitable that these two things would become more distinct over time. And I think that is the way that blockchain, quote unquote, cities are going to evolve. Now, the question that naturally follows is, okay, well, is this going to be the way the blockchain scale? Is this going to be the way we bring in millions of users? Is that there's a ton of cities, each city can only hold so many people, and people just kind of select themselves into cities that they want to live in? I think this is, to me, the answer is a little bit of everything, right? A little bit of everything being like, one, we get better at building cities, right? So people just improve their cities over time. So Ethereum improves, Solana improves, Aptos improves, et cetera. Second would be that we invest in layer twos, so we skyscraper tech, et cetera. But then third is that we just keep building more cities.
Yeah.
And we also build the bridges and roads that connect these cities to make it easier for people to move between them and to interact with these cities in a seamless way.
So with the city analogy, do you not think there's going to be kind of like power law dynamics within the different L1s, or do you think it's pretty uniform across like different L1s?
So the city analogy implies that there's a power law, right? If you look at cities today and you ask, okay, people often would ask me like, hey, Haseeb, do you think there's going to be one chain to rule them all, or is it going to be like a bunch of chains? And to me, it's like, okay, well, the city analogy answers that perfectly, which is, do you think there's going to be one city to rule them all, or do you think there's going to be a lot of cities? Like, well, just look, right? Like there's not one city to rule them all. There are a lot of cities, but there's a power law, right? New York is really big. LA is like maybe, 2/3 as big as New York, or about half as big. And then Chicago is like about half as big as that. And then, you've got Houston, which is like half as big as that. And like that's what it looks like when you look at cities. So there are a lot of cities that matter, but there are also there are multiple cities that matter, but like the top 10 cities are the vast majority of where everything lives.
True. Ultimately, maybe like one pushback on like the city analogy. Why is like maybe in your mind is the city analogy better than like a operating system analogy or communication network standpoint? Is it mostly the ideology standpoint where people have difference of opinions, or is like earlier technology like ETH more BlackBerry-ish, or compared to like newer tech that's like more iPhone-ish?
It's a good question. I'd say there's a more fundamental reason why I think operating system is the wrong analogy for thinking about blockchains. If you're thinking about like Windows or Linux, right? What constraint is there from the expansion of Windows to basically be installed in every single machine? In principle, there's none, right? If you think about a network like the internet or Facebook, the internet and Facebook were basically extensible to like everywhere in the world without, sort of loss of scaling effect. Blockchains don't work that way. There is actually no way for a blockchain to expand to like, 5 billion users, because blockchains are physically constrained by the fact that they can only become so large and still maintain consensus and still maintain decentralization. So there's a scale limitation on a blockchain, the same way that there's a scale limitation on cities. You cannot have a city that just takes up an entire country, right? It just stops becoming a city. It breaks off into multiple cities, and there are generally big like dead zones in between cities, right? That is because of the fact that cities are geographically constrained. They cannot just become infinitely big. And the same thing is true of blockchains, which is why I think the city analogy produces a lot of the same artifacts that blockchains do.
And the main kind of technology bottleneck, in your opinion, is the execution environment, because you cannot continue to parallelize things indefinitely.
It's not just that. It's also that if you make the blockchain arbitrarily large or require arbitrarily expensive resources, then it can no longer be decentralized, right? Normal people will no longer be able to validate this blockchain if you basically make this blockchain. So imagine Solana, right? Imagine like sort of degenerate case of Solana, where the only way you can run Solana is with a supercomputer, right? If that were true, you needed like, terabytes of memory and you needed, I don't know, 1,000 cores, right, to run Solana. Well, in that case, okay, well, certainly Solana could scale to many more users. It could run many more applications. It could have a much larger state. But how many people could actually validate Solana? Like, in what way are we getting the properties of Solana being a trustless chain that you can verify that it's being run correctly? At this point, you got to trust people who own supercomputers, which there aren't a lot of those, right? So
Not yet.
that limitation, not yet, that limitation on blockchains is what makes it like a city. That is why why can't Ethereum be 5 times as big? Like, why can't they just do what Binance Smart Chain does? Just remove the kickstand and just like let it go as fast as it can. The reason why they're not doing that is say, look, it's important that Ethereum be validated by hobbyists, by retail users with laptops. That now people have a different idea of what that means, like how much decentralization you need to maintain that property. But at the end of the day, every blockchain respects that property, and that is the fundamental constraint on scaling.
Yeah, and that's why I think like it's more like a lot of these blockchains in my mind are more constrained from like the ideology standpoint. So like just their views than like pure technology. Because like I think now we have like at least like seen like what better execution environments are and like what kind of more novel consensus algorithms look like. And then if you continue to scale hardware, I mean, in theory, you can continue to scale the overall throughput of the network. So I am curious how ultimately it unfolds.
Mm.
Yeah, very interesting. Okay, maybe we can move on. From like the layer two standpoint, you kind of describe them as skyscrapers. Is how do you see those playing out? Do you think there's many different layer twos? Are those layer twos talking to each other? In my point of view, it's I've just once you have like multiple sequencers, I just like to me in my mind it's like just like adding another blockchain on top of a current blockchain, and then like you have like all the same kind of problems. Ideally, you have a single sequencer, which would help a lot, but I think
Mm.
that's a little bit of a challenge. How are you kind of thinking about layer twos and over time? How do those continue to evolve to help general scalability for the layer ones that are constrained by kind of the hardware standpoint at the layer one?
It's a good question. So I mean, the first answer is that I'm still very uncertain about how layer twos are going to play out. I wrote a piece last year called "I'm worried nobody's going to care about rollups,"
Yeah.
that encapsulates a lot of my thoughts about the space. The problem with rollups is that rollups have become so ideological, right? Like they've obviously been now embedded into the Ethereum roadmap. People believe that rollups are the one true way, they're the only clean and pure way to scale Ethereum. And anytime that you get this much riding on a single technology, you're going to get distortions in how they're perceived, how they're explained, how they're presented. So today, of course, the dominant rollups are optimistic rollups, basically Arbitrum and Optimism. Optimistic rollups have a number of issues that prevent them from being quite as flexible as what ZK rollups can do. Because optimistic rollups, they tend to have very long challenge periods, meaning that you need 7 days to fully withdraw or to fully clear a withdrawal. And they're also they're basically a constant factor of scaling in terms of cost, right? So I mean, I mentioned constant factor in terms of okay, you got to run Geth, but there's also a cost factor, right? Because every transaction that you do on you have to still pay L1 fees because you're posting data to L1.
Mm-hmm.
Now, ZK rollups, which are coming, not just ZK rollups in general, but generalizable ZK rollups like ZK EVM type rollups that allow you to execute Ethereum contracts in zero knowledge on zero knowledge rollups. Those are coming. Matter Labs is already in testnet with ZK Sync. We just saw earlier today Polygon is doing the testnet of their ZK VM. So there's a lot happening in the space. ZK VMs are, I think, in the long run, more interesting than optimistic approach because the ZK approach, there's no challenge period, right? Basically, as soon as the proof is posted on chain, it's valid and the withdrawal can go through. So there's no sitting around and waiting. The other thing is that the fees are lower, so you can actually have higher cost savings. And lastly, the really nice thing about it is that there's a lot of other fancier stuff that you can do, such as using something like a Validium instead of a pure rollup. So Validium is basically a system where you post the data, availability, or the data for data availability somewhere other than on Ethereum L1. And the reason why in the ZK version you can do that, and it's like very dangerous to do that in the optimistic version, is that in the optimistic version, the downside, if somebody is posting bad data and nobody can find where the bad data is that somebody basically does fake state transitions, right? Somebody, corrupts the state or like steals money and nobody can prove what happened. In the ZK version, it is impossible to do corrupt state transitions, right? It's impossible to steal money from someone. It's impossible to do things like that. What you can do is you can grief somebody by not letting them see the state of the chain and not letting them be able to exit their deposit. But you can kind of freeze people up, but you can't actually steal their money proactively, right? And that becomes a big security difference in that you'd be more willing to take the risk of having data being stored somewhere else than on Ethereum, in the case of a zero knowledge rollup situation than in an optimistic rollup situation. If you actually do that, then you get the advantage that now fees can be extremely low, because almost all the fees in a rollup are posting onto L1. If you're not posting onto L1 and you're only posting proofs, then now the fees are amortized just over posting proofs. And posting proofs is basically like a constant factor. So that allows ZK rollups to become very, very cheap over time if they start posting their data to non-Ethereum L1s. And that seems super, super interesting to me in the long run, of how rollups can just be as cheap as like a Solana or as a Polygon.
I definitely agree. I think ZK rollups over the long term are definitely the more interesting technology. Do you think ultimately the ZK rollups, or I mean, not ZK rollups, do you think those fees paid by rollups in general will be cheaper than, say, like fees per contract?
Then fees per contract, meaning
Like on the
like what's happening
parallelization
on
side?
L1?
Yes.
Oh, I see. For something like Solana.
Like if you can isolate the specific parts of state, will they be comparable? I mean, I guess always if you're doing the L2, you're doing some amount of data compression back down to the L1, so it should be cheaper. But
I mean, the answer is that you don't know in advance, because these are all markets.
yeah,
And any market, the question of what's it going to cost is, there's two factors, which is supply and demand.
mm-hmm.
So if there's not enough supply for the demand, price will go up.
Maybe this is like a good jumping off point. Ultimately, I kind of think block space today is more of a luxury, just because it is constrained. I think going forward, these newer chains, Aptos and Sui, and Solana, just by continuing to scale with hardware, are trying to make it more of a commodity. How do you see block space holistically playing out in the future? Do you think it's just an indefinite supply of block space, or there is some amount of cap, or that we have to kind of limit those resources?
It's a great question. I'm going to go back to the cities analogy,
Okay.
right? Because I think, again, this is one of the places where
Yeah.
it just keeps producing, it keeps working. So it's like asking the question. So I think the most valuable resource is land.
Mm-hmm.
Do you think that land will ever become commodified, or that that land will still be a scarce resource? The reality is that there's so much land in America that's just sitting there doing nothing, right? There's just a bunch of empty land that we could build cities on, but they're just sitting there. They're very low value land. The reality is that the land you really want is the land in Manhattan. It's the land in LA. It's the land in, the Bay Area, right? That's the land you really care about. And most of the other land is just worthless, right? It's just, a place for cows to graze. So I think the same thing is kind of true in blockchain and in crypto, is that the idea that block space can become commodified is, I think, a non sequitur. Like, you can create more block space in places that matter by building more and becoming more efficient with the way you build, right? So Solana could scale, in which case Solana's block space, I think Solana's block space is valuable. And people would want to build more stuff in Solana's block space. It has a lot of empty space right now, but eventually that space will get filled and Solana will get full. And then blocks, the price of block space will go up. Same thing is true for every chain. The hope has to be that we get better at building, we get more efficient at building, the same way that every major city in the last 200 years has become much more efficient at fitting people into the same amount of space. That is the goal of blockchain scalability, but in the vertical sense, right, of like improving the scalability for a particular blockchain. But in the long run, it is also clearly true that we're going to need more cities. But the very, very tail end of just totally unbranded block space is not going to be valuable ever. In the same way that land in the middle of nowhere in like, Missouri is not going to be valuable ever.
Yeah. Awesome. Okay. I want to be cognitive of time. So let's kind of segue a bit to bridges. Keeping on the city analogy, do you just think the bridges and the interoperability of these bridges is kind of paramount to go back and forth from these different cities? And maybe like overarching, like I want to kind of start or keep back in both of our minds just like the theme of like usability and like users. And that's like one thing that I have like a hard time with, like L2s and the different L2s or like the different cities, is just thinking about from the user aspect or the product aspect, going from all these things. And maybe bridges is the answer in your mind, but I would love to kind of hear your thoughts.
Yeah. So bridges, I mean, the natural analogy in the cities analogy is highways, right? So
Mm-hmm.
these are the systems that actually connect up cities to each other and make it really easy to go from city to city. Um, in the case of bridges, it's very clear today that bridges suck. Like the UX of bridges suck. It's super fraught. They get hacked all the time, obviously. But even beyond that, it's just very difficult to navigate, right? These are not user-friendly apparatuses. So in the long run, to my mind, the way that interoperability has to work eventually is that it has to destroy the distinctions between being on different chains. And so what I mean by that is, like, as a user right now, if you want to use Solana, you want to use Avalanche, you want to use Polygon, you have to manage all the complexity yourself. You have to manage, like, where are your assets, where's the bridge, how long is the bridge taking, are your assets fully bridged yet, check the transaction on chain, make sure you manage your RPC endpoint, blah blah blah, do all this stuff, right? And every piece of that you got to diligence yourself. Like, is this the right bridge I should use? Is there
Yeah.
enough liquidity on the other side? Is this the wrong form of USDC that's like not going to be accepted anywhere on this other chain? um, in the future, and I think the not too far future, all this shit should be managed by your wallet, not by you, right? So in the future, the affordance is going to be that you just have a wallet, and in that wallet you have assets, and those assets you might want to know, like, okay, I have some USDC. Is that USDC? Is that Polygon USDC? Is that Solana USDC? But from the perspective of the user, you don't need to care if you don't want to care, right? You just have USDC. And if you're like, look, I want to interact with Solana today and I want to go do some thing on Solana, it says, okay, cool. You want to interact with Solana? We're going to go ahead and bridge your stuff to Solana. And you don't need to know how it's happening, because why would you care? And why would you be good at this, right? Like, this is something that software should figure out for you. Is that it says, oh, okay, cool. We're going to do a meta transaction because you don't have any soul to pay gas. So we're going to do a meta transaction to like bridge your Polygon thing from here to here to here to here, and like that'll just happen. Just it's going to take about 2 minutes. Timer's ticking down, and then boom, you've got your Sol in hand now, or your USDC in hand, and all this stuff is just managed for you.
Yep.
This should not be humans making these decisions, right? And so, from the perspective of a user, there should just be applications. And it might take a little bit longer if it's on Solana because you don't have any assets there, like you're not ready to go. But at the end of the day, that complexity should not be pushed to the user; should be pushed to the software.
I definitely agree. I think I'm interested to see from a technology standpoint, because I think there's just some fundamental limitations that, like, as much as like the software can handle like much more complexity than it takes today, how much of like, I mean, just some of the core like technology pieces it cannot abstract, like going from like an L2 to an L1 or a different L1 to L1. It definitely can be much better today and definitely much safer, but maybe like, what are your thoughts? Like, one of the things that I asked Anatoly today and kind of his point of view on like the app chain thesis is that it's more like intranets than like the internet. I'm curious to kind of like, if there's some like core limitations from the technology standpoint that just cannot be abstracted away from either like latency or finality standpoint, do you think naturally, I mean, maybe going back to the city analogy, the most kind of like highly user adopted city just like gains like the most market share because it's just more frictionless than other chains?
Y- mm, possibly. Like when you think about app chains, right? I mean, the analogy in the city's analogy to app chains would be like a town that basically is like a company town, you know. So, like I think of like, the NASA
Mm-hmm.
campus, right? That's like in one city where everyone there works for NASA, and that's like the only reason to be there. Um, that kind of thing exists, but it's not huge, right? It's not like a major part of how our economy is structured. And in fact, like cities tend to be the major way that the economy is structured. And there's some things that really need that kind of architecture, but for the most part, it's kind of a niche thing. And that's also true descriptively. If you look at app chains today, every app chain is way smaller than the major L1s, right? The vast majority of value is located in the L1s. If you just look in CoinMarketCap.
Yep.
And I think in a way, I mean, again, this is not so much a prediction as it is a description of the current state of affairs. But I think that's likely to persist. I think it's likely to be the case that although app chains have a place and there are people who will want to have um, app chains do lose out on most of the advantages of being in blockchains, which is not just that, okay, it's decentralized, which is like, okay, fucking who cares that it's decentralized? The thing that people really care about is that it plugs into all the other magical stuff you can do on chain.
Yep.
And app chains, almost by definition, they forego that in order to be isolated in their own kind of state bubble, so that they don't deal with noisy neighbors, they don't deal with contention over state. And it's I can understand why they would want that, but it's not. It doesn't seem to me like this is going to be where the lion's share of innovation and value in crypto gets created.
That makes sense. Um, Maybe kind of last topic on like infrastructure stuff, and then talk more about like the application layer.
Hmm.
Holistically, do you have like a preference that you think will become more dominant and have a majority of the market share with like sharding or app chain or monolithic chains? Or do you think it's going to just be, again, like spread out and people just kind of pick and choose?
Um, I, I don't have super high confidence. I don't know. I think it's very path dependent.
I think
I think it really matters who executes well.
Yeah, I saw your podcast. I think you did a while back with Bankless, and you I think mentioned your confidence level was like ETH was at like 50 or 60% of like market
Mm,
cap over time. Do you still believe that?
probably. I think it's a pretty safe bet that ETH is going to continue being ETH for a very long time.
I'm curious to see how it plays out. I,
I am too.
yeah, yeah. I want things to scale, and then I want users, and then I'll kind of I don't know. I really want users ultimately.
Yeah,
Uh, uh,
yeah. I think in the long run, look, the EVM has to grow up for
yeah,
Ethereum to really scale. And right now, the EVM is just, it's like JavaScript in 2005. It's extremely bad
yeah.
and needs a lot of improvement before it can really get to that point where Ethereum-based architectures can scale.
The hard part is if they tried to add parallelism. I know a lot of people actually have tried and are continuing to try to do it. It just breaks that backwards
Hmm.
compatibility, which kind of sucks. One of the negatives of being, I guess, the first mover. But yeah, okay. Kind of moving on. Sorry, you have something?
Oh, I was just going to say, I think there are ways to do it that maintain backwards compatibility, such that you can sort of give extra information to the
That's true.
runtime in order
That's
to
true.
make it do things more efficiently and save on gas costs, right? Like if you basically help us run faster code, you'll pay less gas.
Yeah.
So I think there are ways to do it, but the reality is like within Ethereum itself, there is just so much risk aversion, which
Yeah.
is probably appropriate that this stuff has to happen outside of Ethereum.
Makes sense. Cool. So a long kind of conversation on just like cities and countries and the highways in between them. But ultimately, I think
Mm,
what you and I are both like aligned on is like getting more users into these things. Uh,
mm.
what are you and Dragonfly specifically like excited about on like the application front with even on like these ETH and some of these like newer L1s today?
Yeah. I mean, we continue to be excited by DeFi. I still think DeFi is one of the core things about crypto that makes crypto crypto. Um, I think for a lot of the Web3 stuff, it does feel like we're still quite early in figuring out what are going to be the killer apps of Web3.
Hmm.
Um, NFTs and the kind of creator economy, um, although prices have obviously come down and there's been some kind of cooling of heads, I still think NFTs are here to stay and they're going to be a big part of how crypto is you know is understood to the wider world beyond just the financial use cases. At the end of the day, I think we still don't know. And this was how I felt in 2017, 2018 as well, is that after the last market collapse, there was a strong feeling that like, okay, well, this wasn't it. But there's still something, there's some kernel here that is going to evolve into something bigger. And for ICOs, it became DeFi,
Yeah.
right? Like the first use case of DeFi was capital formation, which is what ICOs were. But there became many, many more things beyond just capital formation. And the same thing feels very true to me today about Web3 is that we have these little glimpses of what's possible, but we haven't found the thing yet.
I agree.
And when we find the thing, it's going to be absolutely massive. And it's going to be very, very reminiscent of the things that we're trying right now. You can see like kind of the glimmer that there's a there, but we just don't quite, we haven't been able to quite resolve it yet.
Yeah, that makes sense. Yeah, no, DeFi, I mean, yeah, I was super excited in 2020 once DeFi summer was happening and all the farm tokens. I was still at Tesla at the time and I had very little time to do any blockchain research. But in the little time that I did, I was just looking at different food tokens. But NFTs kind of caught me off guard about how hard they came on into the general kind of universe and how much kind of normal people in the culture ultimately what brought along that NFTs brought along with them kind of influenced everything. It was cool to watch.
Absolutely. Absolutely. I mean, look, I was very much caught off guard by NFTs as well. It took me a while to understand that this was not a bubble
Yeah.
and that these things were here to stay.
Yeah.
Um, but it's been fascinating to see. And that's one of the great things about being in crypto and being an investor in crypto is that you get a front row seat to see how one of the most interesting technological phenomena of the last 50 years is playing out right in front of you. And I wouldn't trade it for anything.
No, it's I think this is definitely the coolest thing going on in technology today. I think if I wasn't in crypto, I'd maybe do CRISPR, which is fascinating, a whole different topic. But
Definitely.
no, cool. I really appreciate your time again. It's been a lot of fun. I try to wrap up the podcast with like kind of spicy takes on things that you believe that the industry does not believe or yeah. So maybe if you have kind of a contrarian take against like the broader market, love to hear that spicy take, and then I can ask like one or two more.
My spicy take.
Cool. I mean,
Well, I got in hot water recently for being kind of not pro. What would I say? Basically saying that I think the abolition of royalties for NFTs is inevitable. It's not necessarily like a moral claim, but more of a
yeah,
descriptive claim of like how I think the world is going to evolve. A lot of that seemed to upset a lot of people, so maybe that's maybe that's the most apropos hot take, given that we're sponsored by Magic Eden.
yes, yes. I would say my spicy take is I'm kind of bearish ETH long term.
Mm. Oh shit. Okay. Why
Yeah.
so?
Uh, I think ETH is optimized for the NCRAC things long term.
Hmm.
I'm going back to like the usability standpoint, like very interested in the user applications of these things, and I think with just a very small subset of people using these things, I don't know. It's not really like the vision that I signed up for. And so I'm very much interested in
Hmm.
these kind of more next generation blockchains that have scalability at like the core focus. And I think it's, in my mind, almost impossible to scale without hardware,
Hmm.
even with like L2s and data compression. So I'm very curious to see how it ultimately unfolds long term.
Right. Right. I totally understand your point, and I think it's a reasonable one. I don't know. In the wrong one, nobody really knows what makes an L1 valuable.
Yes,
Like
that's true.
we don't have a good model of any of this stuff.
Valuations are
So
different from the tech.
yes, that is true. That is very true. But you're saying you're bearish on ETH, not bearish on Ethereum.
I'm bearish on, well, both. I don't think I view it more as like, um, maybe not operating systems, but I do think it is was
Mm,
like the first mover. And this is like, again, like I was an ETH maxi at one point. I've just
right.
learned a lot from the technical standpoint.
Mm,
And yeah, my point of view is ETH is more kind of like BlackBerry, and there's newer things that will ultimately come around. And because not very many users and developers in general have used these things, they have
mm,
no allegiances, and ultimately new things I think will surpass it.
hmm. It's possible. It's definitely possible. And I think the likelihood of that is low, but it's definitely not zero, and it's not 10% either. So it's somewhere. I don't know where I'd peg it, but I do think what you're saying is a world you need to take seriously.
Any spicy? That's pretty spicy. Any spicy takes that you could ratchet up a little bit? If not, we can end it.
I think I've given enough spice for one
Okay,
day.
cool, cool.
I'll cut my losses.
Well, again, I really appreciate it. It was a lot of fun. Um,
Absolutely, Logan. It was a pleasure.
awesome.
Thanks for
Thanks,
having me
Haseeb.
on.
Awesome.